let's talk about the single biggest roadblock that stops people from ever starting their financial journey: money. Or more specifically, the deep-seated fear of just not having enough of it. Be honest, have you ever caught yourself thinking, I really want to invest, but I only have a little bit to spare? Can I actually build wealth with limited capital? Don't I need thousands of dollars in the bank first to even make it worth it? If that internal monologue sounds familiar, you are absolutely not alone. A huge number of beginners are completely paralyzed by this exact doubt. They're convinced that investing is this exclusive club meant only for people with massive incomes or giant savings accounts. But here's the truth, and I really want you to hear this loud and clear. That belief is a total myth. You absolutely do not need a huge amount of money to start investing. What you actually need is the right mindset, a solid strategy, and a whole lot of consistency. So welcome to this explainer, where we're going to completely dismantle the not enough money myth. Today, we're laying out a complete step-by-step small capital blueprint, showing you exactly how starting from really modest beginnings can actually generate massive results over time. Okay, let's dive right into this. We're going to start by tackling the big money myth, then move into the math behind the magic of compounding. After that, we'll cover building the investing habit, playing the safe game, and finally, laying out your long-term blueprint. First up, Section 1, the big money myth and why you need to stop waiting around. The very first massive mindset shift we have to make is getting over this idea of waiting for a perfect amount. A lot of people look at their checking account and think, well, if I only have $50 to invest, what's the point? But waiting for that magical, perfect amount to suddenly appear is just a losing strategy. Someone who starts small today is going to build significantly more wealth than someone who waits 5 years to save up a bigger starting sum. Why? Because investing isn't really about the size of the check you write on day one. It's about how long you stay in the game. It is literally all about time. Which brings us seamlessly to Section 2, the mathematical reality that makes starting small so incredibly powerful, the magic of compounding. So, the crucial point here is understanding exactly what compounding means. Honestly, it is without a doubt one of the most powerful ideas in all of investing. Simply put, compounding means your money grows, and then those profits start generating more profits. It's like a giant snowball rolling down a hill. Your initial capital earns a little return, and in the next cycle, both your original money and your new returns work together to generate even more. Over time, that compounding growth becomes this unstoppable force. When you first start out, those early days, the numbers honestly might not feel very exciting at all. The growth is tiny. But as you hit that midway point, momentum really starts gathering. The profits are generating profits. And then, years later, that small, kind of unexciting beginning looks drastically different. The growth has gone completely exponential. It is absolute mathematical proof that just starting matters so much more than how much you actually start with. All right, so we understand the math. Now we need the psychological foundation. Let's look at Section 3, build the investing habit. Step 1 of our blueprint sounds almost too simple, but you'd be amazed by how many people never actually do it. Start with what you have. People will constantly make up excuses, right? They wait for a bigger salary, or they're waiting for a promotion, or some mythical day when they magically just have more money. But smart investors know a fundamental truth. Starting right now matters way more than starting big. So, whether you have a really tight monthly budget or just a small one-time amount, that is perfectly fine. Start exactly there. And that leads us to Step 2. I love this quote. Habits create results, not motivation. Listen, your first goal in investing is not becoming a millionaire overnight. Your first goal is simply building the habit itself. Motivation is fickle. It's going to fade on a bad day. But a deeply ingrained habit, that keeps you moving forward. If you can build the muscle memory of investing regularly, even with literally spare change, you are already miles ahead of the majority of people out there. Now we have to lock that habit into place. Step 3 is where the real progress happens. Build a consistent system. You see, throwing $50 into an account once and then completely forgetting about it won't change your life. You need a loop. Number 1, you receive your paycheck. Number 2, you immediately invest a set amount. Number 3, you repeat this consistently every single month. This relentless consistency is the actual mechanism that turns tiny amounts of capital into massive long-term growth. But as your small capital starts to grow, a new psychological trap usually pops up. Let's pivot to Section 4, which is an absolutely crucial warning phase of our blueprint. Play the safe game. Because guys, this right here is the danger zone. When beginners feel insecure about only having a tiny amount of capital, they often try to make up for it by taking huge, wild risks to catch up. They want to get rich fast, so what do? They chase hype stocks they saw on social media, viral investments, shady guaranteed opportunities, and these crazy promises of overnight profits. I have to warn you, this is exactly where beginners lose everything. I want to literally slow down for a second and just let this sink in. Desperation creates bad decisions. Just because your starting capital is small does not mean you need an aggressive, risky strategy. It means you need a smart, calculated strategy. Do not let the desire to turn a little into a lot push you into gambling instead of actual investing. So step 5 of our blueprint is to focus on learning while you invest. Reframe how you think about mistakes. Actually, one of the absolute best things about starting with small capital is that your inevitable early screw-ups are cheap. Think of it as basically a low-cost tuition fee for a priceless education. By starting small, you give yourself the grace to learn how markets actually move, how your own emotions try to sabotage you, and how the power of patience really works in real time. Those lessons, they become your greatest assets. And since those early mistakes are pretty much guaranteed, step 6 is absolutely essential. Protect your capital. When your funds are limited, playing defense isn't just a good idea, it's critical for survival. Do not risk everything on one hot stock tip from a stranger online. Don't invest blindly. Instead, you've got to focus entirely on quality investments, real discipline, and strict risk management. Protecting your limited capital is what keeps you in the game long enough to let that compounding actually do its magic. So, we've started small, we built the habit, and we're protecting our money. Now we transition into section 5 to shift our horizon to the future. The long-term blueprint. Step 7 requires the ultimate mindset shift. You have to start thinking long-term. Small capital usually isn't going to create instant wealth, but over years, that is a completely different story. Time multiplies your effort. Time multiplies your discipline. So you really have to stop looking at your app and asking, how much money did I make this month? You need to start asking, what can this small amount become in 5 or 10 years? Changing that one question literally changes everything about how you invest. And once you have that long-term vision locked in, step 8 is where you scale, build momentum. See, as you keep at this, your investing skills are naturally going to improve. Simultaneously, over the years, your career progresses, right? Your income grows. And when that happens, you simply increase the amount you invest. Because you already did the really hard work of building that consistency habit back when you had very little, scaling up now feels incredibly effortless. This is exactly how the most successful investors start. Not with inherited millions, but with rock-solid habits and very modest beginnings. Let's do a super quick recap of this strategy so you have a crystal clear mental checklist to take away from this explainer today. If you're starting small, start with what you have today. Don't wait. Build the habit before you chase returns. Invest consistently through a strict system. Avoid the hype and the get-rich-quick traps. Treat your early mistakes as cheap education. Protect your money fiercely. Thinking decades, not days. And just slowly increase your contributions over time as your income grows. That's it. That is your complete playbook. Never underestimate small beginnings, because the undeniable truth of wealth creation is captured perfectly right here. Small money with consistency can beat big money with no discipline. You do not need to be rich to start investing. You start investing to become rich. Wealth isn't about where you start. It's about the discipline of your daily march. I want to leave you with this final thought. Stop waiting for the perfect amount of money to suddenly appear in your bank account. Take your very first step today. Start building that first financial habit right now with your long-term future in mind. Because I promise you, one day you are going to look back and realize that your small, seemingly insignificant start was literally one of the smartest decisions you ever made. So, ask yourself honestly, what will your small start become in 5 or 10 years? The clock is ticking and the choice is entirely yours. Thanks for joining me on this explainer, and keep building that wealth.